Leanne, talk us through the session.
James, look, a very positive session today, closing on the highs of the day actually. We managed to maintain that strong momentum all day and we did see all sectors closing in positive territory. It certainly did seem like we followed those strong leads coming from European markets. We did see European shares touching fresh 7-year highs. Of course, as those expectations start to build coming into that ECB meeting tomorrow. That was all despite seeing some weaker corporate earnings coming out of the US. Of course, those continuing falls in those oil prices, weak data out of China yesterday, and of course those cuts coming through by the IMF. But nonetheless, I think that the big focus does still remain around that ECB meeting tomorrow. If we look at the best performing sectors, we saw that property sector up 2.6%, materials was up about 2.3%, of course off the back of higher commodity prices. Gold was up about 1.5% overnight, continuing to see those gold stocks performing very strongly, and of course staples up about 2.3% as well, recovering off some of those falls that we have seen recently. The IT sector was also very strong. We saw some of those technology shares over in the US leading the gains, and certainly that translated across to the market today. And finally, another interesting one was that energy space. We saw West Texas oil down overnight close to 5%, but we did actually see strength in that energy sector, up about 0.5% today. So continuing to see a bit of support there despite a lot of this volatility continuing. But certainly a very positive day today, really helped out by that consumer confidence data as well, which continued to push the market higher, as I mentioned, closing on the highs of the day, and also very strong volumes of about $4.2 billion.
So a movement higher in BHP's share price today, Leanne. I think in the end it was up over 2%, so some pretty good moves there. Look, what are the key takeaways? What does it tell us about BHP and its outlook that we didn't already know, if anything?
Oh, look, James, looking at that performance today, obviously continuing to see these record production numbers coming through across for coal, petroleum and obviously iron ore as well. But as you say, we do know that they are continuing to push ahead with their production and of course their supply, like we have seen with Rio. It was quite an interesting performance today. Obviously, Rio yesterday was under pressure despite them obviously coming through with record production numbers as well. But very positive seeing investors reacting today. Obviously, the companies still struggling in terms of their nickel, their copper and of course their aluminium production there as well, coming through with a couple of write-downs and impairment charges as well. But nonetheless, looking at their outlook, they have maintained their production guidance, saying they are still on track for that 16% growth coming through, and of course continuing to focus on their cost reduction. So look, I certainly think despite seeing that share price continuing to come under a bit of pressure, those fundamentals still do look very strong. Obviously that demerger is still on track, and longer term we think that's going to be very positive for shareholders in terms of focusing on those core assets, and of course the benefits of simplification flowing through. Their balance sheet still remains very strong, and they've said previously they are continuing to focus on returning that excess capital to shareholders. Obviously that production growth is continuing to remain very strong across those core assets, and obviously it does remain a low cost diversified producer, and in our mind that allows them to sustain any further falls in those commodity prices, and that certainly will underpin that share price. So looking at the performance of that share price, down 23% in 2014, down another 5% or so in 2015, we do think, given those underlying fundamentals, these levels at this stage do look very, very opportunistic, and do think that there are some good buying opportunities there.
I would say Senex Energy, in the end, that we saw weakness in their share price. I think it was down just shy of 2%. But what did you make of the announcement?
James, look, I think that was probably a result, obviously, of the volatility in those energy markets. We're seeing that their oil price was down about 28% over the quarter, and as a result, we did see some weaker financial metrics coming through from the previous quarter. So if we look at their production, down about 5.3%, sales down 5.4%, and also their revenues down about 33.5%. And of course, that's in the wake of those falling oil prices. So I think as a result, we did certainly see that share price under pressure today. But if we actually look at some of their outlook commentary, it looked fairly pleasing. They did say that they are on track to still achieve that FY15 production target, targeting cost savings of about $6 million. And of course, the main one, looking at cutting their capex by about 20%, obviously as a result of those falling oil prices and the expectation that their revenues will actually be falling coming into the full year results. So all of that certainly looking fairly positive. They are in certainly a strong financial position. position. They have no debt on their books and about $75 million worth of cash. So I think given the falls that we have seen in the share price, it obviously has been an underperformer, down 57% in 2014, another 18% or so in 2015. Potentially does look like some opportunities there, although in the short term I think volatility in those oil prices will continue to weigh, but longer term I think their focus on exploration potentially should add some value in terms of that stock. So certainly quite like the low risk profile and also the high returns coming out of their Western Flank business, which obviously is their main operational focus. So seeing it under a little bit of pressure in terms of weakness in those financial metrics, but potentially could see a bit of upside from here.
Great stuff. Thank you very much. We do have to leave